All information on this channel is intended as educational information and not as financial advice. So let's move on to the TK cross or the Tenkin Kijun lines. Now let me first remove a few things off the cloud. So the first thing you may notice if you've used EMAs or moving averages before is that they look very similar. They're not as fluid, they're kind of herky-jerky, and that's because they're based off of candle closes, 60, 120, the math you can look at. But the point is, they are like EMAs, but they are not EMAs. And like EMAs, when we get things like crosses, that is generally thought of as a sign that the winds of change are a-blowin'. Let's go to the weekly to see this explained the best I know how to. A TK cross below the cloud, let's just turn the cloud back on so we can see it. It kind of depends where you start, so I'm just going to start here. This is a bearish TK cross. Why? Because this is the Kijun, K-I-J-U-N. This is the Tenkin, T-E-N-K-A-N. You can just call them TK lines, that's what I do. The Kijun is the slower moving average. It takes into account more data. It moves slower. The line itself is just a slower version. You can think of it as like a 50 and a 200 MA, okay? When you get a cross of the slower above the faster, that signals a bearish momentum, okay? When you get bearish momentum coupled with breaking of support, which is what the cloud is showing you, that is a signal for bearish momentum entry is starting, okay? Now when you get a TK cross, let me just shut this off. When you get a TK cross again, this is not necessarily, I repeat, not necessarily a bullish entry signal. This TK cross represents a close your short signal, okay? So anybody who was long at this TK cross should have closed here. Was price still below cloud? Yes, to some extent. If we turn that back on, by the time this closed, it was in the cloud, then it went out of the cloud. But the point is, if you were short from up here, this was your signal to close. And that principle holds true on any time frame. Now, if you get a matching cross above or below the cloud, meaning if you get, let me find one. So here's a great example. If you get a TK cross that is bullish above the cloud, so if the cross occurs above the cloud, let's just shut off the price to show you. This is the strongest signal you can get for entry, manual entry, however you want to think of it. This says continuation is happening now. Whether or not it's bullish or bearish, it doesn't matter. The point is, price is going to continue based on this TK cross. And why is that? Because the faster MA, the faster line, the Tenkin, is above the Kijun, okay? Now you can see that this doesn't always work out. The reason for that, mainly just based on my subjective opinion, you know, as we get our 3 drives, which is another weird trading principle, but as the market sort of overextends, the more of those crosses we get, the less powerful they are. So, you know, if you get a cross, you go back into the cloud like this, and then you get another cross above the cloud. You know, if it's like your second or third cross above the cloud on high time frame, I'd consider that a very strong signal. If we zoom into this stuff here on the 4-hour, this right here was the election, the US election, presidential election. And you can see in a vacuum, technically speaking, very strong entry signal, TK cross above the cloud. However, you know, that didn't really go anywhere. It kind of stalled out and just held previous resistance. Again, we have another TK cross not above the cloud, but strong enough. Now this didn't happen until this candle, so again, not the greatest entry. But you can see that these are all viable entries regardless of the end result, okay? Meaning I trust the cloud more than I trust anything else. So if I get a TK cross above the cloud, that tells me to go long. You can see the cloud itself, the support is rising. We've refused to break through support. So again, what I'm looking for here, as far as an entry signal, definitely a TK cross, either in the cloud or above the cloud. If it's above the cloud, it's even better. If I go back to the daily and look at the Bitfinex hack, I can see that here's your TK cross, and we're still above the cloud. So based on cloud rules solely, it's telling you stay in this trade until you see another TK cross. So we didn't see another TK cross until this candle. So that would, let's say you get out at the close of this candle, and let's say you get in here. It's a $200 trade. Now obviously you can close whenever you want, but this is the power of the TK crosses on high time frames. And why was this a close your long signal? Because it was a fast EMA over a slow EMA, that bearish TK cross, okay? This was the bullish TK cross. So again, price was already above cloud was already bullish. All part of the checklist here, TK cross. Even though this looks like garbage sideways, all of this, and it's like the most boring thing to sit through, right? You have to believe in the cloud. Okay, you have to buy into the fact that the cloud is calculating math that you humanly cannot calculate. Okay, that's just how I personally understand it. And again, if we look at another TK cross here, which was a special case with TK cross at a twist, I'll talk about that in a separate video. But the point is, anytime you see a TK cross, that's an extremely powerful signal. Any market, any time frame. The higher the time frame, always better, always a stronger signal. You can see currently we're nowhere close to a TK cross. There is something sort of forming known as a C-clamp. I'll talk about it in a separate video. But so long as the TK lines are bullish, which they have been in this case since September on the daily, there's no reason to even consider the quote trend ending, okay? Everything is fine per cloud. Remember, this will capture 80% of the trend. So certainly some crazy stuff can happen in here, but based on the cloud, based on the TK lines, all signs point to bullish. So checking in with the entry checklist, you'll see number 3, TK cross. You want to make sure your cross matches your position. So you don't want a bearish cross while you're long, and you don't want a bullish cross while you're short. You want bullish crosses above the cloud. If they happen above the cloud, that's even stronger of a signal, okay? But you don't want your short to be, you don't want to be short when you get a TK cross of the opposite market indication, okay? So as bleak as things even looked in here, when we started to get this TK cross, that was a signal for me that was a great market recovery. Another thing you'll kind of notice, again, only subjective based on my own interpretations, when TK crosses are about to happen, stuff tends to happen with the market. Now these are just 2 anecdotes basically, where we had a cross here and a cross here, and that was a strong sign. But you can see other times when we had a cross down here, not much really happened. But you could argue when we have TK crosses that are saying close your trade, don't even second guess those, okay? This was a open your trade signal. This is a close your trade signal. This is a close your trade signal, okay? So let's move on to the last part of the checklist, the lagging span.